quick learning. So kindly subscribe to my channel. It will help me a lot. So now our topic of presentation is basic financial statements. So this is very important topic for all the accounting and finance students, as well as if you are going for your interview and you want to see your career in finance, then this is basic importance for you. So, learning objective. The learning objective is to explain the nature and general purpose of financial statements. So, introduction to financial statements. So, there are three basic and primary financial statements. Number one is balance sheet, then we have income statement, and then statement of cash flows. So, this is a rapidly asked even MCQ and short question, that what are the types of and how many types of financial statements. So there are three types of financial statements, and we will use a corporation to describe these statements. So balance sheet. Balance sheet describes where the enterprise stands at a specific date, that what your company is at present. Then income statement. It tells you about the revenue and expenses for a designated period of time. Then the revenues result in positive cash flow as well as in negative cash flow. Either you are talking about your past, present, or your future. Obviously, there can be two types of cash flow. Either you are generating revenue, so it means you have positive cash flow, and if you are at loss, then it means you have negative cash flow. So, in income statement, the net income or the net loss is simply the difference between your revenues and your expenses. So expense means the things you are investing on your product or service, and revenue means all the money that you get in terms of your product. Then we have statement of cash flows. So it tells you and depicts the way cash has changed during a designated period of time. So it will tell you about the inflow of cash and the outflow of cash. So this is our example to explain all the types of financial statement. So this is an example of Vagabond Travel Agency, and its balance sheet is written here for December 31 to 2007. So on the left side of a balance sheet there can be assets, and on the right side there can be liabilities and owner's equity. So in assets we have cash, notes receivable, account receivable, supplies, land, building and office equipment. And on the right side in liabilities we have notes payable, accounts payable and salaries payable. So owner's equity is capital, stock and retained earning. The both sides should be equal. So it means assets should be equal to liabilities plus owner's equity. If the both value is equalized, then it means that your balance sheet is good or is it at a fine position. So thank you from my side. If you have any question, then kindly comment me, and just stay tuned for our next video. Thank you.